Hey, good morning, everyone. Good afternoon. Welcome to this YouTube live Q&A. I'm Dave Keller. I'm the Chief Market Strategist here at StockCharts.com. Wanted to just go through a quick market update, share with you what I'm seeing midday today, and sort of pave the way for my closing bell show, The Final Bar, which will be on StockCharts TV today at 4 o'clock Eastern. So let's look at what's happening so far with the market. So you had a big sell-off coming out of the open, a little bit of a bounce, but then a dramatic drop going into around 11:30 Eastern. Since then, it's sort of bounced up a little bit. So what does that overall mean? The S&P right now is still down over 0.5%, around 0.6%. Mid caps up and small caps up. So one of the challenges we've had is, mega caps, large caps leading, but mid and small caps lagging. You sort of have the opposite. Market down, but overall small and mid cap actually holding up just fine. The sector picture is where it gets really wonky here. So you have real estate, utilities, traditional defense toward the top of the list. You also have energy, which is really not up a ton. It's more stabilizing. But at the bottom, you have tech and communication services, two big sectors that are weighing very heavily on the overall market returns. So that's sort of how things are sort of playing out here. In terms of what I'm seeing big picture, I'll share with you a couple charts that I think tell the story. Right now, the question has been leadership, right? And so you've had technology and the big tech consumer communications names that have been driving the markets for so long. And so you have this consistent uptrend. But if you look at the breadth characteristics, you see it's actually a little more shaky, right? So you have the cumulative advanced decline line on the large cap names on the S&P 500 that continues to make new highs. But using my sophisticated color coding system, which is just a subjective look at the charts and me as a shorthand of what I'm seeing, I color-coded the rest of these sort of the neutral yellow colors, showing you that even though the large cap breadth has been very positive, you've not had a confirmation of new highs from the breadth read from the New York Stock Exchange or the mid-cap index or the small cap index. So the strength has been from the top, from the largest names. We've kind of known that. And what this chart tells you is that hasn't changed. You've sort of had this disagreement or this divergence. The question is really, what does that mean, right? And how concerning is it? The challenge is you've had this sort of divergence before. I think most notably back here in sort of September, October, you had the large cap breadth actually looking as positive as possible, mid and small cap looking a little weaker. You saw them all breaking to new swing lows, while this really didn't pull as far back. And overall, as you can tell, that resolved to the upside, and it was strength going into the end of last year. So it's one of those things that it doesn't necessarily mean this is the top, but it's the characteristics of tops. Market tops tend to look like this. So again, for me, it's all about the price and seeing what the price does after this point. Until you see some sort of meaningful breakdown in price, overall, the path of least resistance is higher. I should remind everyone, obviously, this is a live Q&A, so if you have any questions, just put them right in the chat, and I'll get to them once I've done sharing a couple more charts. Maybe this will spur some thinking for you as well. So the second chart I would show you is the semiconductors relative performance. I've always asked people I interview, what's your one chart? Like, what's that one thing you would look at as a way to sort of measure the overall performance of the market, the health of the market environment? And for me, the relative performance of semiconductors might be my one chart for right now, because as long as this line is going up, and this is a ratio of the SMH versus the SPY, so essentially the relative performance of semiconductors versus the S&P versus the market. If this line is going up, that tells you that one of those sort of leading indicators for the market is doing just fine. It's performing well, outperforming the market. Overall, you have very little to worry about, which is why at the end of January, this actually seemed a bit concerning. You had this breakdown of this ratio below the low from early January, sort of broke down through the 50-day moving average, broke down below previous lows. But then it sort of reversed and went right back up to the highs. And we just had a breakout yesterday to new relative highs. It's pulled back a little bit today, but overall, this is certainly in more of a bullish configuration than a bearish configuration. That's why I think it's sort of a compelling tell here. As long as that holds up, the market's doing okay. Two sector themes that I'm watching right now. One is with financials, and I think the lack of participation of financials has been a bit of a concern. So, the fact that Financials have held up okay, back above an upward sloping 50-day moving average. That's pretty positive. But the fact that the relative strength has been relatively negative tells you that just other places have been stronger, right? And just holding, holding above water is not enough right now. There are other places that are actually, sort of doing better on a relative basis. So I would love to see financials participate. It's sort of stagnated. If you look at some of the stocks that are up today, it's some of the money managers like Schwab, for example, are sort of popping up on the list, and others. T. Rowe, if I remember right, was sort of on there. So there are some stocks that are sort of popping up there. I would also say with energy's been an interesting sector to watch, and the challenge with energy is it's been such a relative underperformer. So if you look, really from June of 2018, this thing has been underperforming, and until that starts to improve, from a technical perspective, I think you have to hold off, right? I don't think you can get too excited about this because it's just showing you that institutions aren't there. They're really betting on this to go lower. What's interesting right now, you sort of have this bullish configuration, which you might call an ascending triangle, sort of this consistent resistance level and then increasing lows. So as you look here, you can see that the lows are sort of improving. This is coming off of the lows from last summer, from last August to September, sort of retested those levels, now having a bit of a consolidation pattern. If this gets above, the XLE gets above like 64.50, maybe a little, I'm sorry, this is 55.50, sorry about that, right about there. If it would get above and make a new swing high, could actually be kind of compelling. It's still overall very negative, and the pattern long-term has been down, but again, as a bottom fishing candidate, boy, if this would start to emerge, I think what's most interesting is that people are under positioned for that, under prepared for it. I saw the question about the software index. That's a great question. Let's look at it here. So if I look at the industry summary page, I'm going to go to technology. We're going to bring up the software index, which is this right here. So, software obviously down today, right? And so, and coming off, and again, I was talking to Grayson Rose, who's also on the management team here, as we were walking in together from the parking garage, and we talked about the market being down on a chart like this. This one down day isn't that bad, but it feels a lot worse than it's been because we've just had this unrelenting, relentless uptrend, right? This consistent uptrend of higher highs and higher lows. So one down day actually feels pretty challenging. Feels pretty painful. Even though, even by any technical measure, if you just look at the most recent swing low, we're still remaining above it. So first things first, as long as the pattern of higher highs and higher lows continues, I would expect the uptrend to be in good shape. So 3450 on, this is the Dow software index that I would be watching. 3450 is sort of that previous swing low. If we would start to break down through there, that would be the alert I would set. That would be the alert to tell me, hey, revisit this chart, see if there's something of more concern there. At this point, we've traded down to that level, but have not closed below there. You want to see it close below there before you could assume that there's relative weakness. On a relative basis, it's held up very, very fine. That pattern has continued to hold up very nicely. It's been recently overbought, but it's been overbought for about 4 months now, so it's not like that's unusually new or different. So overall, I think software is holding up fine. One day is not a pattern. Multiple days, seeing it on the lower end of the return list for a sequence of days is what would start to concern me. But overall, I think technology remains in pretty decent shape here. The last thing I would share you then real quick is with home builders. We talked about this on my show yesterday, the final bar, and looked at home builders in particular, some of the home building ETFs like ITB and XHB. We also looked at some of the big names like Pulte and Toll. This is the chart of Toll, ticker TOL, and as you can see, I think it's an interesting one to watch because it's testing trendline support. And when the market feels extended and when the market feels like it's starting to roll over, I like to look at a chart like this that seems to be at a fairly buyable point, right? If you buy into the long-term bullish story, the bullish thesis, we've pulled back to sort of trendline support, right? So we've tested this line a number of times. We tested it here at the end of January, beginning of February. We've now tested it again this week. Does this line hold? If it holds and we see this continue higher, it tells you that overall stocks like this are in fairly good places. Buyable pullbacks are buyable. They're not breakdowns. They're buyable pullbacks. They're short-term corrections within the long-term uptrend. And that's it. if and when this would break down through some of those levels, I think that's where you have to concern. And for me, the breakdown test would be the relative strength here at the bottom, right? So you can see it's also testing trend line support. If these break down, if it breaks down below 47, below that trend line, relative strength breakdown, it tells you that high-flying names like Toll Brothers that have been good relative performers year to date are starting to rotate. That would signal to me that you have a potential for rotation, a potential for profit taking, different things that might want to indicate some sort of consideration about rotation of leadership. I did see a quick question about the Baltic Dry Index. This is something my friend Greg Schnell talks about often. If you missed his show, he does a really good job about it. But basically, this is a measure of shipping. It's an overall measure of the exchange of goods globally. It's bottomed out, and again, a lot of people would consider this tends to be sort of a measure of overall health of industrials, of the rotation of goods globally, how much things are shipping. The issue is it's been down consistently as the market's held up. So I think there's been a bit of a disconnect. So personally, I don't read a ton into that. It's more a theme that I would sort of be following a bigger picture. Thanks for the question on those. That's our YouTube live Q&A. Overall, I hope this has been interesting. If you're interested in this sort of look at some of the charts, join me for the final bar, which is 4 o'clock Eastern, 1 o'clock Pacific on StockCharts TV. Just go to our website, stockcharts.com/TV, and we'll see you there. This is Dave Keller from StockCharts. Have a great morning.